Hi everyone, today let's talk more about this strike that seems like it's going to happen. Then we'll take a look at the max pain finish. Then we'll get into the charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So looking at this strike, we talked about it a little bit yesterday in the video, but this is pretty ridiculous here. You can see they're requesting demands such as a 40% pay increase over 4 years, which would cripple these companies, and it would also put their earnings up to around $130 to $150 per hour, which is a massive amount of money, especially for what are generally considered unskilled workers. That would put their annual salaries on a full-time basis up to around $250,000 to $300,000 per year, which again is astronomical, way above average household salary in America. And it just seems like these unions are weaponizing their strikes, which you can see that's what they're saying here. Here's the leader of the UAW. Again, I don't think the UAW is always doing bad things. In the past, I do think that they did stand up for workers and they definitely needed it. But now it seems like they're being unreasonable, just like we talked about the yellow trucking company, where the union there demanded more and more money, and the company literally just went bankrupt. And now there's no money for anybody, and it does seem like their requests would put Ford and General Motors in that same situation. And here you have the Ford CEO saying that it's very frustrating, and I did watch the video of him talking to CNBC, and he said that he felt the UAW leader was not being honest. He wasn't negotiating with anyone. They haven't returned a counteroffer. It seems like they're just trying to go forward with the strike and really just have their moment in the sun. But they did say that layoffs are a consequence of the strike and that they will have to start laying off employees if there is no work for them to do. They mention here the key demands: 40% hourly wage increases, a 32-hour work week. And they say if they were to meet these demands, they would not have been able to share the $75,000 in profit sharing over the last decade, and that they would have lost $14 billion over the last 4 years instead of profiting nearly $30 billion. And they have made reasonable offers of close to around 20% in wage increases. So realistically, they've offered about half as much as what they were requesting, which does seem like a fair middle ground. In terms of the economy as a whole, it'll definitely be interesting to see how this pans out. I'm sure the automakers will suffer, and their earnings will suffer if this strike continues, but it does not seem like there's an end in sight quite yet. Moving over to the economic calendar just for a moment. You can see there was basically nothing on the calendar. We talked about it yesterday, but 1-year inflation expectations, 3.1%, pretty good. 5-year expectations, 2.7%, also pretty good. Consumer expectations, higher than the forecast. Consumer sentiment, lower than expectations. Mixed results, not very impactful. Moving over to max pain, obviously max pain shifted a lot. It was around 440 yesterday. We thought 450 was going to be the high. It ended up being the high yesterday. We moved down pretty close to that level. I thought we would finish closer to 445, but I was off by about $1 to the downside. Put call ratio went up super high to 4.23, options 4.4 million. And looking at the chart, you can see it shifted really dramatically. All the calls end now at 449. I'm sure those were taken off as the market was moving much lower. And this is a pretty bearish finish going into next week. Moving into the charts just for a moment, you can see it was just a straight falling knife throughout the day. Took out that first level, took out the trend, took out the next level. Didn't make it all the way down to the level below that around 441.50, but we're right at this previous low. You can see it here on the daily chart. Took out the 21, took out VWAP. We're holding right at these previous lows. Could absolutely hold here. You can see this longer term trend line sitting in that 441 area. You could argue we're still in this zone. We just took out this one trend line here. Momentum moving towards bearish. Big bearish volume on the day. Does not look great going into the next week. Critical level there at 441.50 going into Monday. Moving over to the NASDAQ on the hourly and the daily, same thesis. Broke down massively. I did not take off my positions as soon as I could have. This first level broke in the pre-market, so I couldn't really do much there. And then once this trend line broke in that 830 candle, probably should have taken off my positions. And then the next level broke. Well, that was another opportunity. And I really didn't exit until we were pretty low in this zone. Then we started to get a pullback and find some support at these previous lows. And then we hit my next level at 370.01 and then held that level. So you could argue this is a bullish little trade off of that level. You can see that's the 21 EMA on the daily chart. So interesting level, certainly could trade off of that. And I did pick up a slightly bullish position coming off of that level. If it holds, this could be a nice little move. If it breaks down, I'm watching for 367.63. Moving over to the Russell and the Dow. Russell came down, took out that first level that we talked about yesterday, took out the highly traded zone, tested my level at 183.28 once again, threw a big wick through those levels, hit the previous lows, and then ended up holding. So trading off that same level that we have been basically all week. Dow similarly broke down, took out that midpoint, did not get all the way down to 345.24, so still consolidating in that range. Moving over to Apple and Tesla, basically no change. Apple gapped up, fell through the session, tested the 144 once again. Bearish momentum, bearish volume. At this point, it does feel like this is going to break down below that level, and if it does, there's a lot of room here to the downside where it would start to fall. You can see just how little volume there is really from 170.90 all the way down to this 165 area. And I would expect it to fall through that fairly quickly. Tesla gapped up and fell also, but continues to look quite strong. Momentum faded a little bit, but it's still in a bull trend. Moving over to staples and discretionary. Staples gapped up and fell just like everything else, sitting at that 21 EMA on the 4-hour chart. If that holds, bullish. If it doesn't, bearish. Similarly on discretionary, gapped up, fell, took out the 21. We're right at that highly traded zone. Next level is 170.68. Looks bearish, momentum turned bearish. Volume was up. RSI broke down pretty dramatically. Does not look great. Moving over to breadth just for a moment. The 50-day average broke down, took out that previous candle right at the level here, 32.22 once again. 200-day average actually held up pretty well. So we gapped up and rallied yesterday, broke down from that level right to the next one, 49.76. But we're well off of these lows, still bullish momentum, RSI still looks clean. So again, breadth still holding up fairly well, and it does seem like we could get a bit of a move higher next week. We'll see how that plays out. Obviously the other charts look super bearish, but breadth still showing a little bit of strength. Moving over to the volatility indices. Move index continues to fall. VIX ended up bouncing from that trend line. So once again, this trend line continues to be relevant. Touched it here, bounced, touched it again, bounced. Question is, do we get follow through from this level? We're still in a technical downtrend. Momentum is bearish. RSI did end up breaking above the SMA, so that's not a great indicator for the bulls. But if you're bearish, this might be an interesting point going into the Monday session. Moving over to my accounts, you can see I definitely lost money. It was a big down day across the markets, but not terrible. IWM was down more than 1%. Roth account only down $60, so outperformed the market there. Qs, my core position is 200 shares, so based on this, I would have been down around $1,200, and I was down around $750, so not great, but still better than the markets. I ended up re-picking up a core position here, selling that 371 call for $1.24, so looking to collect $250 in credit going into the Monday session. Like we talked about on the Qs chart, if that level holds, I'll be in good shape. If that breaks down, I'll probably take off these shares or sell a bunch of calls to protect myself to the downside. Overall, it does look bearish, but we are at critical support, and if it holds, we could look for a bullish move into the Monday session. Let me know down in the comment section what you think of the auto workers strike. Is it going to come to a culmination? Are they going to make $300,000 per year? Or is Ford and GM just going to go bankrupt? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.